Good afternoon, George Cabaligos for HFT Bonds. Sorry about not having a video up on Friday. We had major issues here in the office with the internet. So here we go. Friday did put up a reversal day in the market, minor reversal day. Remember, the objective of the reversal day is to retest the lows from Friday. Last night, or very early this morning, the 10-year went and retested the low from Friday in the 10-year. The bonds got close but didn't quite get there. And actually, if you look at the 10-year, they actually took out that Friday low by half a tick and then reversed. Again, I'll emphasize my mantra that you must watch both sectors of the curve, 10s and 30s. And when one meets a signal, you take it, you cover, you move on. Now, next trade. We were looking in the morning email the possibility that low, last night's low, or very early the morning lows, were a B wave low, and that we would have a C wave rally ensuing. Well, so far so good. The rally, off of the lows, caught a little bit of that very early this morning. Unfortunately, started getting some sell signals around 9:30ish. That got me out of my longs and actually got me a little bit short, and ended up getting stopped out on that trade. But the rest of the day was all grind me higher, short covering, and it looks like, if you're in the chat room, you saw the chart that I posted there of a possible rising wedge formation. Rising wedge formation. Corrective pattern, typically 5 waves up off the low. We're in the 5th wave, I think, higher. Targets up at Friday's highs, obviously the first high, 126.29 plus on the 10-year, 136.04 on the bonds. Usually goes a little bit further than that. The trend line that I drew on my chart had 136.11 on the bonds and 127.03 plus on the notes. Obviously, that's a rising wedge, so that level is going to keep going up as time moves on here a little bit. You can take a look at an hourly chart and draw the same trend lines on there that I have. What I'm saying is we should make some kind of higher high, and then you want to be on reversal alert. I looked at this website. It's called the Pattern Site. He runs statistical analysis of all these different patterns. Rising wedges typically work something like 69% of the time, where you'll go up to the rising wedge and then break lower back to the base of the wedge, which is what classical technical analysts would say. If you break the rising wedge formation, you typically go back to the lows of that rising wedge. 69% of the time, those aren't great odds, but they're okay for trading, right? If you have 69% of all your trades are winners and you have good money management, you're a great trader. So we're actually making new highs right now as I'm doing this video. It's a little bit after 3 o'clock Chicago time. So we're looking for some higher highs and then a possible reversal. That's what I'm trying to say here. We'll be on alert. Hopefully we'll see some kind of a blatant sell signal, some kind of a doji at those highs, or something along those lines. It'll give us some kind of a heads up or a warning that we're starting to see a shift from these short squeeze buyers to some type of proactive sellers, which we haven't seen since early this morning. So I don't have much to add today. It's a holiday week. We've got supply next week. I think the refunding 3s, 10s, and 30s next week gets announced. I want to say Wednesday, but I can't remember off the top of my head. I'm sorry. I'll have to double check that, and I'll post it in the chat room tomorrow. So that's about it, guys. Have a great night. I'll see you tomorrow morning bright and early in the email.